It's too much pressure to host this thing. Ryan, you should have had an invite. There you go. I don't know how
Is this
you do it. It's too much pressure.
Caps Mike?
Yeah,
Caps Mike, is this thing on?
right. I started the first one and like no one, there wasn't any music. I'm not sure if you guys were there. Like it was just like that John
Right?
Travolta gif, or like in Pulp Fiction where he's
See?
like stare. That's where I was, and I'm just like, we're just gonna start fresh. We'll see what happens. So
I'm
I
I am so
apologize.
glad. I am so glad you can feel my pressure that I'm under
I
every
don't like
time.
it. It gives me
Right?
anxiety, for God's sakes. All it is a stupid Twitter Spaces, and I'm over here like nervous for some reason.
Freaking
Like,
out.
yeah, I'm like,
Freak.
oh no, I'm gonna mess it up. But hey, happy
Well,
Thursday, you
welcome,
guys!
welcome to my world. Happy Thursday to you. Happy Thursday to everyone. Welcome to
Yay!
today's Grey Market Blast, where myself and the wonderful, the magnificent, the glamorous Angie Setzer will be providing us all with a rapid roundup of the latest pricing flows and market moving news in agricultural markets. But as usual, so that I don't get a spanking, I'll get the legals out of the way. Nothing discussed on the Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed the glamorous with a capital G, Mrs. Angie Setzer. Angie, how
Yo,
are you, my love? You
that's
good?
me. I'm
That's
good.
me.
I'm all
That's
right.
me.
Yeah, see, they say that's me anyway. I'm pretty good. I'm just here trying to figure out what there is to talk about that is interesting and entertaining and insightful. And it's August, so guess what? None of these things are able to be provided to you guys. So I
Yeah.
apologize if that's what you were looking for. How's the vacation going? Just real quick before we dive in.
It's going very, very
Is
well.
today the
Although
last
apparently,
day or is tomorrow? Or is
no. Next Tuesday
Oh
is the
my
last
God, I
day.
need to live
I'm
your life.
milking
Look
this
at
one.
that one. That is a good
Although
milking.
it 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 does appear that I am prime meat for Croatian mosquitoes.
Oh
Unfortunately.
yeah, that's fun. That's gross. Get some off or something. I don't know. Get some DEET. We'll send it to you.
Well, apparently the quinine in tonic water is apparently very good to stay to kind of repel them, and so basically gin and tonics all round.
Oh, nice.
You know,
Yeah, I remember
work the problem.
the
Work the problem.
remember the first time I went.
Hello.
My headset apparently just decided it wasn't going to work anymore. My bad.
Ah,
No, we're not going to work now either. Here, let's try that
no,
again.
I can hear you. I can hear you.
There, let's try that. Apparently, we're just gonna have to get a new phone. So, anyway, back to what we're talking about. Export sales are going to be bullet point number one for me. Just kind of an export sales sort of rundown. You can still hear me, all right, right, Ryan? Everything okay?
Yep.
Okay,
Yeah.
cool.
Yeah. Yeah.
I
Yeah.
didn't want to
All
start just
good. All
going
good.
off for a while. This morning's export sales. A couple things to point out. We did see cancellations in old crop, so we had about 80,000 metric ton, I think it was, of old crop corn, 89,000 metric tons of old crop corn cancellations. So there'd be a lot of folks, or maybe some folks that are like, "Oh no, that's not a good sign, honey." We're 3 weeks away from the end of the year. Like we really can't even execute on the book that we have. Realistically speaking, like when you look at old crop exports with the USDA projection, we're probably in line, but really when it comes down to it, like that's an old sort of it's done. You know what I mean? That put a pin in it. The old crop marketing year is pretty well tapped out, and so looking at new crop on the corn side of things, but another big week. Wasn't above expectations like last week. It was kind of at the higher end of expectations with just over 2 million metric ton sold. You saw Mexico in for 500,000 metric tons of that, a big chunk of it. Unknown in for 356,000. Japan was in for a bunch. And so sort of fun fact when it comes to new crop corn exports, our export book currently for new crop is double that of what you saw a year ago at this time. What's most interesting about all of this is like we keep hearing about how big this Brazil crop is and how worried people are that we're going to see them kind of take over the marketing opportunities when it comes to Jan, Feb, March, which is a valid concern. But to see the front loading nature of our corn book, typically you don't get big October, November, December corn exports. Like it's just we tend to kind of run on fumes. Soybeans take the bulk of elevation and all of that sort of thing. That's not looking to be the case this year. We already have Korea and a handful of others booking December shipments out of the US. And realistically speaking, if we maintain kind of the value that we're offering down the curve, you could see a lot of these cash traders around the world get to where, hey, when we're looking at this, like historically speaking, these cash prices are relatively cheap and we can lock in the curve at a good value. And so we've got to really continue to watch what that looks like. Obviously, the USDA is already at a very lofty level from an export standpoint. So, it's not one of those things where you're going to see them kind of continue to ratchet export expectations higher on the corn side of things. But, the argument right now in a lot of cases is, okay, when if production comes down, then obviously you're going to have to cut into demand, to offset a lot of these production losses, which is valid because feed and residual, did get bumped up pretty substantially. Residual usage is tied directly to production. So you will see that come down if production came down. But if we continue to operate at this capacity, we're going to be hard pressed to see exports come down
Right.
ridiculously, just simply because we're going to have a really, really lofty start to the beginning. The other thing that is really interesting about what's going on in Brazil with their corn, in particular, as we keep hearing, oh, the crop's so big, it needs to be raised 145 million metric ton, whatever, and that's fine and dandy, but we can raise production, but we also have to raise domestic demand because the cash market in Brazil right now is saying that domestic demand is so great that it doesn't want to allow supply to work its way out of the country. It's as simple as what it is. You can't export corn. You can't buy corn to export at a profitable level as an exporter with margin. And so a lot of things are going to have to change. The farmer's going to have to become an aggressive seller, in Brazil. And really right now, there's not going to be pressure for them to do that until the soybean crop is made and they know what's coming into the pipeline, unless there's a big rally or something ridiculous happens with their currency. So to see us continue to sell big corn into the world market, is a point of interest and something we're likely to continue to see happen, for one, and for two, another interesting sort of point is we saw Spain come in, for a flash purchase. Spain is not a traditional customer of ours. Typically, you'll see the Black Sea, or Europe sell into them. So that's really something that you're looking at as a point of interest as well, is that
So,
with, go ahead.
so with that then, so as you said, because when you said, because even my eyebrow was raised when you said
Mm-hmm.
Spain, and obviously I have no idea what we're talking about. So does that, yeah, what would be the rationale behind that? Is that because of like reduced demand in Europe, and because obviously there has been some serious heat and
Yes.
whatnot, and serious and supplies coming out of the Black Sea
Yes.
region? Is that kind of where they're going? They're just
You've
being
had
forced.
crop
Their hands being
shortages.
forced,
Yeah,
pretty
you're
much.
basically looking at an uncertainty over what Europe is going to produce at this point in time as you see a
Right.
continuation of heat really kind of center in these areas that are major corn producing regions. You also have a lot of problem with Ukraine. We continue to see the government kind of be like, oh, we're optimistic about production. But like Michael Lee with the Black Sea grain, no, like he's an agronomist that's on the boots on the ground. He's like, I wouldn't be as optimistic about these Ukraine production
Right.
outlooks as what these folks are. And so basically what it's telling you, what Spain coming in and buying US corn is telling you, is that the European corn, the Black Sea corn, is more expensive, or at this point
Yeah.
you're guaranteed X quality,
Got you.
you're able
Okay.
to get
Yeah.
because I've said that before, like, cash grain transactions rely on three things: the ability to execute, the quality of the grain that is provided when you sell it, and the value. And so the
Yeah.
US typically is the best quality, best ability to execute, and so we tend to command a premium for that, as you would
So
expect. But now we're
so kind
cheaper.
of so you could to put a cliche on it, it's paper grains for show, cash grains for dough.
Yeah, yeah, I like that idea. Like,
Yeah.
I'm going to give
Yeah.
you
That's, you could have that
I'll
one. You
keep
could
it. I'm
have
gonna
that
use
one.
it. I'm gonna use it and pretend I made it up. So, there's just kind of a rundown on the corn export thing. You're continuing to see solid ethanol exports as well. And so I kind of look at that as a,
Right.
a secondary corn export sort of market structure that'll help,
Yeah.
to reinforce, domestic ethanol demand. And so just kind of fun things to be paying attention to, because there is an argument
Add it to the
currently,
list.
about, well, if production gets reduced, then obviously we're going to have to cut demand, which
Yeah.
is accurate again on the feed and residual side. Especially residual is tied directly to production. It's like a half to one. You add a bushel of production, you're going to add a half of or third or something like that of residual when it comes down to it, I guess, is what, I don't know. I'll have to ask someone smarter than me me to actually kind of lay that out. But you'll see a reduction in other sources of demand. But when it comes to, two specific positions in corn at this point, exports and ethanol, the margins say that without a significant rally in futures, we're going to remain competitive and able to
Right.
incentivize this demand structure. Over to soybeans, export sales, big cancellations in old crop that some folks might point to and be like, oh no, that's so bad. But we're already still ahead of the USDA's current projection for old crop exports. So we have room for cancellations. And honestly, we really couldn't probably execute in the next 3 weeks on what the open book is. Most of them are getting rolled forward to new crop. The new crop bean book is still lagging where we should be. We're down versus a year ago by about 42 million bushels. The USDA, though, is forecasting a 170 million bushel cut. So we can kind of keep it into perspective when we're looking at year versus year over. Obviously we'll be watching to see if we get any sort of export demand. We did see, unknown in to buy beans, but over the last few months, unknown's been Egypt and like Denmark or something more than anything else. So we'll see what that looks like and kind of what transpires there. Wheat sales are 80 million bushels ahead of last year. USDA is currently forecasting a 50 million bushel increase. Sort of same scenario, not as aggressive in corn because obviously we just had an influx of northern hemisphere supplies. So there's a lot more in the way of competition in the physical market for corn currently. But you're seeing some interesting spread things, some interesting basis things happen, cash prices around the world really kind of firming up a little bit. The one thing that's really weird to me that I keep hearing about is like France. France has this big wheat crop, but their harvest went quicker than average, and you've watched their cash prices and spreads firm throughout. And so one of these things is not like the other. And typically, when you see a rapid harvest pace and the cash market firming, it's not indicative of a record crop. But I'm not there, so I don't know. Other side of things that we're looking at is obviously the Russia Trump meeting in Alaska. I almost said Russia. I'm Sarah Palin over here. I don't
I
know.
was like, where's she going
I
with
had
this
no
one?
idea. I was just all of a sudden my brain was like, "We're going on an adventure," and I'm not giving you that word. So they're gonna have that meeting in Alaska tomorrow. The administration's kind of like, it's a listening exercise. You are seeing Russia really aggressively push to the west. There's some uncertainty over are you going to have a land swap? I think someone said something about it's going to be like Gaza, I think, or something where it's like not really owned by anyone, but owned by both, so that sounds horrible, I think, at this point.
Yeah, I was gonna say,
That
this just sounds like a complete
All
mess
right,
from the
that
get
sounds
go.
like the worst idea. Like, let's just keep the war going at this point, I guess, because that's all you're going to do. We'll be watching that and what that means and how everything plays out. There's obviously a risk that Trump comes out and says big sanctions makes China mad. You know what I mean? So you may see some risk dynamic kind of or management of risk, or maybe a little bit of a weakness going into the meeting itself, in soybeans and anything else, just simply because if it does go badly, does Trump, do the secondary sanctions? Does that make China mad? It's all a fun little butterfly effect that we get to look at.
Right, got you.
We did see hot PPI and hot supercore data today.
Very hot. Yeah, very hot.
So yeah, the hottest PPI, producer price index. So basically, for those of you who aren't smart like me and you have to like Google things, the producer price index, basically is just what are these manufacturers having to pay for the inputs of the things that
Yeah.
they're building, making. Um,
Yeah. I think by definition, and obviously, economic data. When was that the last time? When was the last time that went by
right.
definition? But if for me, when I got my crayons out and someone's using that to explain it to me, is basically this is definitely it should be a leading indicator of where consumer price inflation is going, because obviously higher cost of inputs going in, higher cost passed on to the consumer.
Yes. Yes, 100%. And so it just kind of is an indication, right, that tariffs may be causing inflation if that's the way you want
Yeah.
to argue it. It's up to you. Some will say that's, basic economics, and I'll say, I got an English degree, so I don't care. I don't even think I took economics in college. So you're welcome, you guys. Thanks for listening.
I can't spell
Anyway.
economics.
Right. I can't spell beginning on the first try, no matter what. I always put one too many N's in it. But anyway, I think we're going to have a continuation of this sort of inflation talk. What does this mean? And how does that influence commodities? Again, I'm going to reiterate, you've got corn and wheat, excuse me, sitting sitting at resoundingly low levels, comparatively speaking to everything else when you do in factor in inflation, whether you want to or not. I know there's a whole argument over, well, is disingenuous, yada, yada, yada. I don't care. I'm not that smart. I'm just here to look at the price and the charts and, all that good stuff. So
Exactly
we'll
that.
see.
Exactly.
I really like to see there's a gap on the continuous chart, and then I'll shut up. There's a gap on the continuous chart in the September chart, I think right around 367.5. I'd sure as hell like to see us fill that and then kind of bounce back. That way it's not looming over top of us anymore. Could
Gap
be
and go.
something,
Gap and go.
right?
Everyone loves a gap and
Right.
go.
So right now we're sitting right at what we're, basically the low of the day today is the low of the market post report or right close to it. And so we'll see. We'll see if the continued pressure is able to kind of resurge and we close that gap and then run from there, or if we just leave her open to give bears something to talk about, I guess. But crude's up decent, dollars up, beans are down 7 currently, corn's down 3, and wheat's down 2.5. So I think that'll do her.
Awesome, Angie, as always. Thank you, thank you, thank you so much for taking the time to do these calls. I really appreciate it. I know our listeners do as well. Speaking of listeners, as always, thank you so much for tuning in. Whatever you're doing, keep it tight, stay safe, look after yourselves, and we will see you all tomorrow. Much love.
Have a good one, guys.